With Bitcoin, gold, and so many US stocks currently at their all-time high, there's one place in particular that becomes all that much more interesting and has currently almost been forgotten by many investors. We're talking about China. And so in this video, I'm gonna share with you exactly why we see huge potential in especially two Chinese stocks out of the tech realm, that is Alibaba and JD.com. I'm gonna give you our outlook on those stocks. We're gonna dive a little bit into fundamentals. Stay tuned, we're jumping right in. Hello and welcome to another video by HKCM Global. My name is Joe, and as just mentioned in the intro, today we're gonna take a close look, finally a comparison between JD.com and Alibaba, because these two, first of all, share many similarities, and also these two dominate the online retail market in China. And I would likewise, for the start of this video, share with you a little bit out of our HKCM model portfolio here, out of the China Titans package, because both Alibaba and JD.com are part of our China Titans package. If you're not familiar with what we do, we analyze about 200 assets on a daily basis. Stocks, commodities, cryptocurrencies, you name it. And also, of course, then stocks out of China. And those stocks out of China, which we analyze, we have collected together in the China Titans package. And for those packages which we provide for you, we also provide a model portfolio. So stocks out of that specific package, which we pick and enter into those stocks. And here in our model portfolio, you can see that currently we are about 32% in the profit with our total portfolio. We have already realized gains here in that portfolio of 18%. And there's three stocks in particular that make up almost half of our model portfolio here, which is Alibaba, Baidu, and JD.com. And these two, Alibaba and JD.com, we're gonna take a close look at in this video right now. And this right here today is also hugely beneficial for you, even if you're not a subscriber to this package here, because for JD.com, for example, I mean, you can scroll down here and see our entries to those stocks. So for example, Alibaba, we have one position, Baidu, we have two positions, and for JD.com, we have two positions as well. And you can see here, we just went into JD.com on the 10th of September. So last week we went long JD.com at $33.50, and we're currently just 3.6% in the profit. I mean, great profit for 1 week, but what I want to get at is 3.6% only in the profit from our entry. So still a great time for you to also get into JD.com if you wish to do so. And before I'm gonna continue to share with you our outlook on the stock of JD.com, and you can see for yourself why it might be a great idea to also join into the party at JD.com, I would first like to give you a little bit of a comparison between those two companies, because for me, I do not live in China, and so companies like Alibaba.com, JD.com, I've heard of them, and sometimes I am not really sure what exactly they are doing, how they differ from one another. And so I have prepared a little something for you, because on the first glance, those two companies are super similar. So for example, going over to companiesmarketcap.com, if we look at Alibaba.com, you can see that they're a company handling e-commerce, tech, internet, and retail. JD.com, e-commerce, internet, retail, and tech. So basically, they do the very same thing. However, there are still small and super interesting differences between the two of them. So for example, if we look at revenue, you can see that regarding revenue, right now, JD.com over the last couple of years is sitting between $155 billion to $175 billion. Alibaba, not that far off, also sitting between $128 billion up to $140 billion. So pretty much the same ballpark. JD is a little bit ahead here in revenue. However, you can already see that regarding market cap, JD only sits at roughly $50 billion in market cap, whilst Alibaba sits at a staggering $387 billion of market cap. So why is that then? And usually if you see a discrepancy like this one, it's one of the following. Either one is growing like crazy while the other isn't, or one is just producing way better earnings than the other at the same revenue level. And the later is the case here. So if we look at Alibaba, for example, at their $140 billion revenue last year, they managed to pull off $23 billion in earnings, which is quite a good margin. And JD, as you remember, last year, $175 billion, so quite a bit more revenue. However, earnings only $7 billion. So Alibaba really is pulling in 3 times the earnings, while JD.com pulls in about 20% more revenue. So super important differentiator right here between those two companies. Also in the business models, they diverge from one another slightly. So JD.com, basically, if you're not familiar with that company, you can imagine JD.com pretty much like a Chinese version of Amazon, however more tech focused. So JD.com mainly sells electronic products, and they also have their own warehouses, they have their own delivery infrastructures, they also even provide drone delivery, so pretty much like the core business of Amazon. However, they do not have any huge mentionable software department like Amazon has. They are also not that deeply into cloud computing. However, then Alibaba, which is pretty much in some regard a Chinese version of eBay, if you will, because Alibaba doesn't have all that much inventory themselves. They're all about connecting sellers and buyers. So Alibaba is a platform where you as a merchant can list your products and then customers can buy your products off of Alibaba, and then there's this direct shipping between you as the seller to the customer. However, Alibaba has expanded their business way more successfully than eBay did, because they also established themselves as a provider of cloud computing services, and they also are quite successful with their payment providing service of Alipay. Maybe you've heard about that one. And so then with two companies so similar yet so different, that of course begs the question, which of them is the better investment for you? And since we ourselves just recently went long, as mentioned before, last week in JD.com with our model portfolio, by the way, link down there in the description if you are interested in subscribing to that as well. Let's just start off with JD.com here on the 8-hour time frame. So this is the 8-hour chart. Every single candle that you can see here on the screen displays an 8-hour window in the trading realm. And so then let's maybe pull this just a little wider here. So we said 10th of September, so that was roughly here. So in that area we went long here in JD.com, and ever since, I mean, yeah, just a slight gain, pretty much still on the same levels. And if you like to join us along here on the trade, you can of course do so, but that of course is up to you. No investment advice here. So our outlook then here for JD.com. So ever since this wave 5 bottom here, we have so far in the new overreaching long-term wave 3 to follow this blue wave 2 bottom here, we have so far established an overreaching wave 1 here already. And ever since we've seen an A, B, C correction to follow here, this wave 1 high. And we currently conclude that we already have seen here the wave 2 bottom in the market at the end of August here on the 29th. And ever since, we are in the very early starting stages here for our overreaching wave 3. This is our clear primary scenario. You can also see that we have a secondary scenario here on the screen, currently marked at a 35% probability. But this one becomes all that more irrelevant as we go along to follow here this primary projection of the wave 3 to unfold. And you can see even from current levels today as we speak, up until only the high in the wave 3, we're looking at roughly 90 to 100% here only in the wave 3, and we're not even talking about the wave 5 here then to conclude this overreaching wave 3. And then to complete that outlook even, what does that look like here on the overreaching time frame? So jumping here from the 8-hour chart then to the 4-day chart here. Our long-term projection for JD.com looks marvelous. Lot of potential here. So long term, we have seen an overreaching wave 1, major wave 1 top here back during COVID times in February of 2021. And ever since, we have seen a sharp and violent correction all the way down, pretty much spot on 80% in the loss for JD.com. And that is tremendous. That is tremendous for such a giant in the tech realm as JD.com is. I mean, going back to revenue development, right? I mean, we're talking about 80% of a loss between early 2021 and here the early 2024. And what did revenue do in that time? So early 2021, this was this time right here. So the 2020 numbers are just behind us, and up until 2023 revenue, we had just perfectly fine growing revenue, but still we saw this 80% loss here in the stock of JD.com. So that really was an overextension here in the stock of JD.com. However, if you as an investor are now seeing yourself on the other side of an 80% correction, you can be sure that there's no more speculative and overextended leveraged money here in the stock of JD.com, which is a good thing. And that's exactly what we want to see for long-term potential here to get into a stock. And that is why we conclude that we have currently not yet even developed the wave 1 high of this intermediate count here to follow through then with this overreaching wave 3. So this, what you can see here in turquoise, is not the overreaching wave 3 to follow this wave 2 bottom here. So this is only the undercount, right? And so even here, just in the undercount of our more long-term time frame projection, we already see at least 300 to 350% of gains here in the stock of JD.com. Sounds great to me. I also do like legacy and business cases that have proven themselves in the market and are not just a wild vision of some young aspiring entrepreneur. So JD.com looks great to me. And that's why I also got quite a few bucks invested in JD.com. So then, Alibaba, somewhat different story in the overreaching time frame. Similar to JD.com, we saw a huge overextension here in COVID times. However, the wild correction started a bit earlier here for Alibaba.com, started already in late 2020, not only in the beginning of 2021. And here from the top to the bottom, we also saw, pretty much spot on an 80% correction, so perfectly tracking JD.com. Only difference here is from the lows, we have already seen currently 200% of gains here for Alibaba. And that's why up until our next target zone here on the chart, we do only see roughly a 200% run here for Alibaba compared to a 350% run roughly for JD.com. But that of course is thanks to the already tremendous performance for Alibaba here in the recent months and also in the just very, very recent weeks. I mean, starting here from the end of August, right? Starting here from August 28th up until today, as this video is being recorded. This is almost 40% in just mere 2 weeks. Okay, 3 weeks to be precise, but still 40% in 3 weeks for such a huge and established company like Alibaba.com. That is a performance that investors dream about, and that's also the reason why, coming back to our model portfolio, with Alibaba currently we are 117% almost in the profit, and Alibaba also here then is then our strongest, oh no, it's not our strongest, but close to our strongest performer here in the China Titans package. Here you can see Tencent Music is even a bit up ahead, but with the speed of gains that Alibaba has been making here over the last couple of days, Alibaba will have caught up in no time. And so then here, also similar as with JD.com, we also have an alternative scenario here currently marked at 33% probability, which is right now, under the current developments, almost completely uninteresting already. So by the next time I'm giving you an update here on Alibaba.com, this one will probably already be gone. Right now it is still possible on a mere technical level, but if you ask me, that is pretty much off the table. Which means then that our clear primary scenario, which will probably not be challenged, is here to follow through with this 3, 4, 5 wave structure here leading into the overreaching wave 3, then probably after such an extended move we will probably see a rather shallow wave 4 and then wave 5 to follow through to take us here to this overreaching wave 3 top here, following this wave 2 bottom that we have seen in January of 2025 here in Alibaba. So then I hope that was a helpful overview for you to give you a bit more clarity on your investments in JD.com and Alibaba. Glad you stuck around. See you in the next one. Take care. Bye bye.